Dear viewers, I am your host Muhammad Asif Jaja and you are watching YouTube channel ETV 786. This channel is an education gateway and easy guide for business students. Before starting the lecture, I would request you to view, like, share and comment the videos and subscribe the channel for instant updates. Quick channel review. We have presented 7 courses on the channel. Number 1, accounting. Number 2, business management. Number 3, business law. Number 4, business taxes. Number 5, business mathematics. Number 6, insurance and its types. And number 7, business statistics. You can watch these complete lessons on the channel. Now we are presenting business audit. Here we present the course number 8 of YouTube channel ETV 786, that is business audit. Let's start the course. What is an audit? Audit is the financial investigations into your business. 3 hows are important to learn about the audit. Number 1, how to properly prepare for an audit. Number 2, how they can affect your business. And number 3, how to find the right auditor. Types of the audit. There are 3 types of audit. Number 1, internal audits. Number 2, external audits. And number 3, internal revenue service or IRS audits. Internal audit. An internal audit is an evaluation of business's internal controls and accounting processes. These audits help make sure your business remains in compliance with laws and regulations and help maintain the accurate and timely reporting of financial data. Importance of internal audit. Number 1, regularly scheduled internal audits are essential in a wide range of industries. Number 2, through audits, business owners and executives can identify potential problems in the workflow before they become evident in an external audit. And number 3, regular internal audits also provide risk management and safeguard against potential fraud, waste, or financial abuse in your business. Process of internal audit. 4 steps are: number 1, identification. First, management will identify a department that they wish to audit. Then number 2, audit. An internal auditor will attempt to collect an understanding of the current internal control process and conduct fieldwork testing. Then number 3, report. Then the auditor will follow up with management about the issues they have identified, prepare the official auditor's report, review the report with management, and number 4, follow up. Follow up with management to guarantee the suggested recommendations are in place. Auditor's responsibility. Number 1, during an internal audit, the assigned auditors observe, take notes, review documents, and interview employees. Number 2, auditors often ask questions from employees regarding the company's overall objectives, safety standards, training, and compliance rules and regulations. Number 3, then the auditor briefs management on the results. Then number 4, during a briefing, auditor communicates the strengths and weaknesses of the department while offering recommendations. And number 5, they also verify details with management for accuracy and ask for any disputes. Number 6, once the details are satisfied, the auditor's report is finalized and expectations are given to the management on corrections to be made. Number 7, management and the auditor will both commit to a timeline to correct any issues. Then number 8, once all agreed upon issues are implemented satisfactorily, the audit is officially closed. Time intervals of internal audit. An internal audit can be conducted on a daily, weekly, monthly or annual basis depending on the circumstances and schedule which fits a business's need best. Number 2, internal audit may be scheduled in advance in order to give a department time to prepare documents and information, or they may be a surprise if unethical or illegal activity is suspected. 4 steps to prepare for internal audit. Step number 1, prepare an internal audit plan. An internal audit plan is a list of all the audit tasks and obligations that will need to be conducted over the agreed upon time period. This should be prepared with the auditor and reviewed by the management. It is important to determine specific steps, procedures, and the main focus of the audit. 4 steps to prepare for internal audit. Step number 2, prepare your employees. If the audit is regulatory, it is good practice to give departments notice so they can have any necessary financial documents and materials ready. Audited departments will also be involved in implementing the necessary changes recommended by the auditor, such as new training requirements or revisions in compliance policies. 4 steps to prepare for internal audit. Step number 3, selecting the internal auditor. Internal audits are typically performed by an internal auditor who is an employee of the company. Internal audit don't need to be certified public accountants or CPAs, but can earn a certified internal auditor or CIA qualification. which requires them to follow agreed upon standards governed by the Institute of Internal Auditors or IIA. 4 steps to prepare for internal audit. Step number 4. Purpose of an internal audit. The main purpose of an internal audit is to assess and improve the effectiveness of administration and operations, provide risk management, and provide more control over the critical financial processes in your business. Purpose of internal audit can be summarized as number 1, evaluation, number 2, assessment, and number 3, improvement. Scope of internal audit. The scope of internal audit includes the examination and evaluation of the adequacy and reliability of the company's system of internal control. Internal audit's work provides assurance across all the business activities regarding the extent to which management controls ensure that number 1, significant risks are identified, assessed, and appropriately managed. Number 2, objectives are established and achievement against them is monitored. Number 3, operations are conducted in accordance with company's policy and procedure. Scope of internal audit. Number 4, the company's assets are safeguarded from significant losses including those caused by fraud, waste, inefficiency, and commercially unsound practices. Number 5, relevant laws, rules, and regulations are complied with. Number 6, operations are conducted effectively, efficiently, and economically. Number 7, systems under development are monitored, that appropriate internal controls are built in and are consistent with the organization's needs. Number 8, management information systems are reliable and secure. Scope of internal audit. Number 9, major company projects achieve their objectives. And number 10, throughout the company's activities, it can demonstrate good governance. In addition, internal audit may perform special reviews requested by the senior management or the audit committee. When plans are changed for such reviews, this is reported to the audit committee so that it clearly understands the implications on resources and for the assurance it requires about internal controls and any impact on the delivery of agreed plans. External audit. An external audit is an examination that is conducted by an independent accountant or accounting firm. This type of audit results in a verified certification of the financial statements of a business. These certified statements are required for all publicly held businesses and can be requested by shareholders, investors, and lenders if there is a suspected discrepancy in the report. Significance of external audit. External audits are critical in the fact that their certified results remove any bias and questions about the state of a company's financial status. All external audits performed in the United States follow the same standards called the Generally Accepted Auditing Standards or GAAP, which are set by the Auditing Standards Board (ASB) of the American Institute of Certified Public Accountants or AICPA. Other countries follow their own laws and standards. 3-step process of external audit. Step number 1. Appointment of auditor. An external audit starts with either the appointment or hiring of an independent auditor or independent audit firm. In general, shareholders appoint an auditor at the annual general meeting. 3-step process of external audit. Step number 2, audit, wherein auditor will collect, assess, and interpret data to gain a full understanding of all of the company's activities. This includes examining the business's accounting records, looking through financial statements in order to obtain evidence, verifying compliance with standard accounting policies, and confirming the assets that have been purchased. 3-step process of external audit. Step number 3, audit report. Once they feel their investigation is satisfactory, the auditor will submit their report and state their objective opinion. An external audit's finding and an auditor's opinion can seriously influence the reputation and future of a company. An auditor's opinion and rating can mean whether or not a company stays in business. Auditor's responsibilities for conducting an external audit. Number 1. During an external audit, an auditor will thoroughly review the financial and accounting records. This involves checking for the accuracy and completeness of these records, whether these records have been prepared in accordance with the generally accepted principles, and whether your financial statements are correctly representing your company's financial position. Auditor's responsibilities for conducting external audit. Number 2. The auditor's process includes going through the records used to create each financial statement and recreating them to see if they were created correctly. They will also compare your business to others in the same industry to attempt to identify differences and irregularities that potentially be sign of incorrect financial reporting. Auditor's responsibilities for conducting external audit. Number 3. At the end of external audit, the auditor will prepare and deliver an auditor's report to your business, including the details and findings from the audit. This will include the discrepancies found in the financial reporting and any non-compliance with rules and regulations relevant to your business. Intervals of external audit. Generally, a company does not have more than one external audit per year. Mostly, it is conducted at the end of each financial year that also can be a fiscal year or calendar year. 4 legal obligations for external audit. Obligation number 1. Publicly held companies are legally obligated to annual external audits due to the regulations of the Securities Act of 1933 and the Securities Exchange Act of 1934. The results of this audit must be submitted to the U.S. Securities and Exchange Commissions. Other countries have their own legislation. 4 legal obligations for external audit. Obligation number 2. Non-profit companies are also often legally obligated to perform annual external audits due to the federal and state regulations. Non-profits that receive $500,000 or more in federal government funding per fiscal year must conduct an A-133 audit. Other countries have their own laws. 4 legal obligations for external audit. Obligation number 3. An external audit also occurs at the random request of an authority to confirm that the accounting records are following standard practices. For example, an external audit may occur when a governmental entity is questioning a part of the financial statements of a company. 4 legal obligations for external audit. Obligation number 4. Some instances where an audit may be ordered are when the IRS or other revenue services of the other countries detects tax fraud, or when shareholders feel that the company is not producing GAAP compliant financial statements, or when there is a core suspect of illegal activities due to the spending of business funds. Who can perform an external audit? An external audit is performed by an external auditor who works for an independent accounting firm. Generally, an external auditor must be a certified public accountant (CPA) and must follow the US Generally Accepted Auditing Standards (GAAP) or certified chartered accountants of other respective countries. Twofold preparation for an external audit. Number 1. Prepare your team. In preparation for your audit, it is wise to designate an audit liaison or audit manager within your team who will act as the main contact for the auditor. This will the process of the audit run smoothly and prevents miscommunication between the team and the auditor. Whenever the auditor has a question or request, they should be referred to the audit manager. When picking an audit manager, a wise choice is an experienced team member who has very strong project management and communication skills. Twofold preparation for an external audit. Number 2. Prepare your records. During the audit process, you should expect to receive requests from the auditor for additional information and documents. These may range from evidence supporting a specific transaction, such as receipts, to more thorough descriptions of your company's process and controls. It is wise to maintain a detailed list of all records that you provide to the auditor during the process and keep track if any of your documents are taken off premises. Reason to perform an external audit. The main purpose of an external audit is to validate a company's financial statements and to provide assurance of the accuracy of financial reports. The results of an external audit assure third parties that the financials of the company are correct and secure. Needs to perform an external audit. While external audits are oftentimes required, some businesses find it beneficial to perform them voluntarily due to the assets of a verified auditor's report. When a small business or non-profit applies for financing, having verified and accurate financial statements can come in handy. Audit results may also be prerequisite for certain contract bids or grant proposals. Many companies also find that conducting an external audit is a way to help build public confidence in their company. Internal Revenue Service or IRS audit. An IRS audit is a formal investigation conducted by the Internal Revenue Service in order to verify that the information entered on your business tax return is accurate and correct. These tax audits can be triggered by unusual or unordinary deductions and forms of income listed on your tax return, or you can also be selected at random. Time intervals of IRS audit. Your tax return is subject to an audit at any time within 6 years of initial filing. Though in general the IRS only includes tax returns filed within the last 3 years, it is very important to know that if the IRS determines that you are subject to an audit, you will be notified only via US postal mail. Other countries have their own law and rules. 3 types of IRS audit. Number 1. Mail audit. Mail audits are documentation requests from the IRS that a taxpayer will receive and respond to via mail. Typically, these requests will be so benign that you may not even realize that you have been audited at all. The IRS may request additional information about certain items or issues or suggest specific changes be made to your return. 3 types of IRS audit. Number 2. Office audit. Office audits are in-depth in-person interviews conducted by an audit officer at your local IRS office. During these interviews, you will be reviewing bank statements, past tax returns, and other relevant documents in order to legitimize the suspect items on your audited tax return. Three types of IRS audit. Number 3, field audit. Field audits are very in-depth in-person interviews conducted by IRS agents at your home or business. During a field audit, an IRS agent will not only review financial statements and past returns, but also make assessments based on observations about your place of business and the processes occurring there. Responsibilities of auditor in IRS audit. Number 1. During an IRS audit, an agent will ask questions and ask you to present them with specific documentation. This will include evidence to back up tax deductions, forms of income, and tax credits that you have claimed on your tax returns. Number 2. The length of the tax audit will vary depending on the type of audit that is conducted, how complex it is, and the taxpayer's willingness to cooperate with the IRS agent's findings. And number 3. Once the investigation is complete, the agent will conclude the audit with one of 3 findings. 3 possible findings of IRS auditor. Number 1. Agreement. The result of the audit determines that changes need to be made and you agree to make the proposed amendments. Number 2. Disagreement. The result of the audit determines that changes need to be made and you do not agree to make proposed amendments. As a result, you can either file an appeal or meet with an IRS manager for dispute mediation. And number 3. No change. All information on your tax return is reviewed and confirmed and you do not need to make any changes. How to prepare for IRS audit? Organize, organize, and organize. The best preparation for an IRS audit is to get your records and files organized. If you are selected for an in-person audit, promptly collect and organize the records needed of you. Having tax returns and records such as receipts, bills, loan agreements, and account statements organized by year will allow for a smoother experience when dealing with the questions and concerns of an IRS audit agent. Auditor's opinion. The auditor's opinion is arguably the most important and critical part of the auditor's report. There are 4 common opinions issued for companies in an auditor's report. Number 1, clean or unqualified report. Number 2, qualified opinion. Number 3, adverse opinion. And number 4, disclaimer for opinion. Auditor's opinion. Number 1, clean and unqualified report. This opinion means that the auditor believes that the company's financial records are correct and in compliance with the guidelines set out by GAAP. Most of the time, an audit will conclude with this opinion. Auditor's opinion. Number 2, qualified opinion. This opinion means that the auditor found that the company did not follow the proper accounting standards. However, the company did not technically break any laws or compliances. The auditor will state the specific reason and areas where each issue is present so that the company can make the necessary adjustments. Auditor's opinion. Number 3, adverse opinion. This opinion means that the auditor found that the company did not follow acceptable accounting practices and also found discrepancies in the company's financials. The auditor will list any suspicions of misstatements or misrepresentations in the company's financial statements. This opinion is the worst outcome and can have very severe legal consequences if not corrected quickly. Auditor's opinion. Number 4, disclaimer of opinion. In this opinion, the auditor could not complete the given audit or has chosen not to provide their opinion. This can happen when the auditor cannot remain impartial to the business or cannot access the needed information. Choosing the right auditor. The auditing process and its results are crucial and critical to your business. So choosing the right professional for the job is essential. An auditor is responsible for maintaining an unbiased opinion throughout the scope of the project and needs to remain independent from your business. Viewers, thank you very much for watching ETV 786, that is Easy Guide for Business Students around the globe. Please do like, share and comment the videos and subscribe the channel for instant updates. Bye bye till the next show.